Hi everyone, hope you're all well, staying safe, etc. Been a while since I last recorded a video for you all, so I just thought I'd do another one with a few small updates, nothing too onerous this time. First one really just to check whether these videos are still useful or whether you want us to continue doing them for the foreseeable future. And we had a lot of information to digest and share with a lot of people all at once, so I felt like videos were the best format for it, but we've had a lot of positive feedback. But just because things are starting to they're not going to be normal for a while, but getting more normal again, I don't want to just stop if people find them of value. So if people want to let us know whether they want more or less, or we've stopped doing stuff that we used to do before lockdown, or things that you need from us, just let us know, and we'll try and do more of what you need. That said, just a few updates really. Probably the most pressing one is regarding those of you sole traders and partnerships who have accessed the self-employed income support scheme for the 80% of profits that was paid back in May or whenever it was now. There's going to be another payment in August for 70% of average of last 3 years' profits rather than 80%. But just a sort of word of caution on whether or not to claim it. I think the HMRC have given a lot more clarification now. At first, we thought that the payment last time was for March, April, May, which they paid in June, wasn't it? And then thinking that it would be June, July, August that they would pay in August. But HMRC have said that's not the case. What they're doing is they've put the cut-off date of the 14th of July. And they're saying that the first payment was for any 3-month period where the business was negatively affected by COVID-19. You were entitled to that payment, and now you're entitled to the second payment in August if your business is continuing to be negatively affected after the middle of July. There's some specific examples they've given, interestingly, around the construction sector, because I think that's quite a good example. Around, were merchants open? They weren't open in March and April, but now they are, and now you can get back to work and so on. And I think it just it leads me to suspect that they're probably going to be a bit stricter with this second payment, not in the sense that they will hold the payment back. I don't think that'll be the case at all. But I would think people who opt to receive both payments won't all get checked, but are probably more likely to get a bit more scrutiny. And they'll probably look, especially if your profits in this tax year are in line with previous years. If your profits have been negative? Don't get me wrong. If the business continues to be negatively affected after July, then you're fully entitled to the grant, and I wouldn't dissuade people from claiming it. But if things are back to normal and your business, hopefully business is back where it was. Just be a bit more cautious about making the second claim in August, because you would need to demonstrate to them, should they ever ask the question, that from the middle of July onwards, the business was continuing to be affected. Who knows what the future holds? We don't know what's going to happen in the near future, but it's just probably, I don't quote me on this, it's not fact, it's just my own interpretation. I felt like the first claim was almost like a bit of a free pass. The second one, they'll just be probably a bit hotter on. So that's that. A couple of other updates. I think it's important for anybody who has recently or is looking at potentially having capital gains in the future, in this tax year particularly. They've changed the way that capital gains are reported now. So any capital gain that's made during a year needs to be reported and paid within 30 days. It doesn't just go on your self-assessment return as it used to. So I had a client who just a couple of weeks ago, property gain, and I've gone through the process. It's difficult to set up from our end, but not that difficult to report. So the process really is that as a taxpayer, if you've got a capital gain, you need to register with a government gateway account. Going back to what I just said about the self-employed income support scheme, most of you should have government gateway accounts, hopefully. You need a property tax account that's linked to that government gateway account. We can then get your details and link there to our HMRC government gateway account, and then we can complete the capital gains report for you, advise you what the tax is, and give you the reference numbers to pay the tax. So just I want to be very clear that any clients who have got or thinking of having capital gains this year, we need to get those reported and give us plenty of notice We can't be doing it at the last minute because we have to fit into our work schedules, etc. Finally, just another thing that was playing on my mind recently, a couple of clients have advised recently about company cars. It's a question we get asked a lot, is around company car taxation. What's the best way of doing it? So I think the advice is pretty simple now, especially if you're a limited company. Changes slightly if you're a sole trader or partnership. Little bit more, you can be a bit more flexible, but most clients who've got limited companies now, if you're going to get a car and you want to put it through your business, electric vehicles are by far the most tax efficient way of doing it, and they are going to be for the next 2 and 3/4 years. We know what the benefit in kind rates on cars are going to be, and so electric cars, you get full write-off for the purchase of the vehicle and then minimal benefit in kind for private use of the vehicle. So electric vehicles are really tax efficient, and that's what I'd be doing if I was getting a new car. I'm not though. If you want to get a hybrid, hybrids are okay. They work out about tax neutral, typically speaking, but it feels good putting the car through the business. Therefore, that normally is the way I'd lean, but I need to know the specifics. And if it's, if you're getting your typical petrol, diesel kind of vehicle, they're not very tax efficient putting them through the business. So it's the usual route of keeping the car outside the business and claiming mileage of 45 pence per mile. But yeah, that's it for now. Hopefully there's a bit of something in there for everybody. And as I said at the beginning, if you could let us know if there's anything we could do to help over the coming weeks and months, then we'll be happy to. Okay, well, stay safe and speak to you soon. Thanks, bye.